I'm very happy for the support extended by banks and financial institutions to have a detailed deliberation on the financial opportunities for MSME sector and the subject for which is very contemporary and very critical for the economy this day. MSME, or the micro, small and medium enterprises sector, is an important pillar of the Indian economy, and it contributes greatly to the growth of Indian economy with a vast network of around 30 million units, creating employment of 70 million, manufacturing around 6,000 products, contributing about 45% of the manufacturing output and about 40% to exports, directly or indirectly. According to the World Bank, they account for more than 80% of the total industrial enterprise, employing an estimated of 117 million people. This sector assumes a great importance now as the country moves towards a faster and inclusive growth agenda. As we look forward to Make in India reinventing the glory of manufacturing, the policy framework derived for MSE should cover criteria such as enabling framework, supporting framework and subsidy framework for very small businesses. Enabling framework is of utmost importance as the government will need to build the bridges with its existing projects like Digital India, Skill India, Startup India. The strong interlinkage of the MSME sector within the framework will provide the impetus to entrepreneurs to do things differently, as well as provide enough trust to the credit delivery system for long-term support. The growth and sustainability of the MSME is dependent on the availability of finance, marketing and technology and skilled persons. Finance plays a vital importance for the growth of this sector. However, these small businesses identify access to finance as a key constraint to growth. The World Bank estimates that the credit gap is anywhere around 230 billion. That's a huge amount. Most dominant factor affecting the MSME sector is access to loan finance adequately and of course timely. This problem is persistent despite clear instructions from the Reserve Bank of India and the Ministry of Finance to encourage flow of funds from the commercial banks to small enterprises. I heard just a couple of minutes ago that there are some actions taken by the RBI on stressed loans and things which are effective till the March of 2020, and the same can be deliberated by the respective people as the seminar progresses. But that's a welcome initiative, and we really look forward for the SMEs to make good use of it in case they really are in need of that. It is observed that there is a strong structural underpinnings to the inadequate flow. The organizational structure of the banks, process within them have taken them far from task orientation. I am sure all are aware that the 3/4 of India's micro, small and medium enterprise, the MSMEs, do not have any access to banks or financial institutions, making their business vulnerable. Assocham, the premier trade body of this country, recently reported on the MSME sector revealed that about 33% of the country's MSMEs have access to banks or financial institutions financing channels. In the absence of adequate credit, majority of the MSMEs prefer to raise financing through personal channels. To encourage greater bank-led financing, RBI has increased its focus on this sector through their lending policies such as priority sector lending norms, but still the financing gap has widened and significant demand-supply constraints exist. The gap is being widened because most banks are hesitant to provide credit to small units because they feel these firms are non-transparent regarding their financial position. The reason for this may be some of the entrepreneurs may not grasp their financing conditions well. This results in hesitation from banks to give loans to MSME units. As you all know that most of the entrepreneurs are like graduates out of engineering or having a technical background, and they venture out into industries, and at the same time they're a startup. They cannot afford to have big employed bankers or CFOs to guide them through this, and I think they need more hand holding. That's where the banks should come forward and see them through their travails and actually help them to make it big. Most of the reports on MSME indicated that MSMEs are also facing the problem of delayed payments for their buyers, and this adversely impacts their working capital as well as their next cycle of production by affecting their ability to service the debt. However, the Government of India, through an amendment to MSME Development Act 2006, made provisions to mitigate the problem of delayed payments, whereby any buyer who fails to make this payment to MSMEs as per agreed terms or a maximum of 45 days would be liable to pay monthly compounded interest at 3 times the bank rate notified by RBI. Actually, this is a welcome step, and I really, as I do run a MSME in one of the areas of packaging, and we had seen this has changed a lot with all of our big customers who started to pay within 30 days now, and we really are upbeat about that, and our working capital requirements have dropped drastically after this has come in. So this is a welcome move, sir, and this will really make the MSME is very healthy, and it can be deliberated more on how we can go ahead if somebody is not following on this. The Ministry of MSME has also launched a specialized portal for facilitating MSMEs to report cases of the delayed payments of bills to draw the attention of the buyers. The Facilitation Councils and the Ministry of MS and other important initiatives of the Ministry of Corporate Affairs have notified new guidelines to address the concerns of small businesses or delayed payment that not only make it mandatory for all companies to file half-yearly returns detailing outstanding dues to MSME suppliers, but also assign reasons if such delays are more than 45 days. This is what we are talking about, and it's fantastic actually. Another important issue identified by the committee was the utilization of the available credit guarantee and the insurance schemes by banks have been lower than potential due to the capacity constraints and the conditions that limit eligibility and operational issues. The MSME sector at present has debt finance demand of over 32 lakh crores. Out of this, over rupees 6 lakh crore debt is financed through the formal sector. Considering the significant scope for flow of banking credit into the MSME sector, RBI had taken steps like priority sector lending to encourage greater bank-led financing. However, the financing gap has also widened given the massive demand-supply constraints. Public sector banks account for over 70% of the debt financing to the MSME sector, while private and foreign banks account for only about 20% of the credit flow. I really don't know why there's such wide gap, but maybe I need to be corrected if these figures are wrong, or we need to correct the figures somehow.